Mug life, baby. Mug life, baby. Yeah, we rockin' the booth. We mugging for life. We mugging for truth. Smaulgld here, and he's spitting the facts about the pumper community and the way that they act. We mugging for life. We ain't playing the games. We all know the lies and we all know the names. Come on. Mugging for life. Mugging for life. Smaulgld. Yeah, mug life, baby. Mug life, baby. Yeah, we rockin' the booth. We mugging for life. We mugging for truth. Smaulgld here, and he's spitting the facts about the pumper community and the way that they act. We mugging for life. We ain't playing the games. We all know the lies and we all know the names. Come on. Mugging for life. Mugging for life. Smaulgld.
Hello and welcome to another Smaulgld live stream. It is Monday the 6th of May 2019 and it is Monday night mugging for life with Smaulgld. Tonight's topic: Buffett trashes Bitcoin as Fidelity Investments set to launch their crypto trading platform. Good evening, Smaulgld mug stackers and game changers. Good to have you here with us tonight. And we got a long show tonight because we have not covered any news or cryptocurrencies or markets in the past couple of days because we had Saturday Night Silver with Smaulgld and we had Solid Gold Sunday with Smaulgld the past couple of days, so we're going to catch up. Warren Buffett making the news, popping off about bailouts, popping off about the markets, Bitcoin, along with his sidekick Munger also popping off about Bitcoin. And remember, these two gentlemen are also no fans of gold, and they're pretty much applying the same rationale against Bitcoin. We're going to discuss that a little later on in the program. Also, we have news of Fidelity, $7 trillion under investment, getting ready to launch its crypto trading platform. We've got word from Christine Lagarde of the IMF and her views on cryptocurrencies. And we have news that Ethereum futures trading may soon be a reality in the next few weeks. And we have a Smaulgld stimulus speculation later on in the program. Now let's take a look now at the gold and silver markets and some gold news. By the way, last night's charts from Solid Gold Sunday with Smaulgld are up now on Smaulgld.com, as are the charts from Saturday night. So plenty of charts on both gold and silver. You can look at them at your leisure on Smaulgld.com. Also, when you're on Smaulgld.com, you can check out the options to buy precious metals from Money Metals Exchange, Golden Eagle Coin, and also SD Bullion, and we have links there. And if you do click on those links, you'll pay no more, no less than if you visited those sites directly. But if you do buy from those links, Smaulgld will get a small commission. It is a good way of helping out the site because the site does not have any advertisements on it. We don't have any YouTube ads to bore you or to click through. So please help the site out. If you are going to buy gold or silver, please consider doing it through those sites. You can compare pricing and shipping, not investment advice to buy gold or silver, but if you're going to do so, please remember to use those links for your purchases. Also, you can donate to Smaulgld or join either Patreon or Subscribestar to support the channel, or you can make a donation via Bitcoin or Litecoin, or you can send a check or small items of value to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820, or of course you can always use PayPal. Now, by the way, also you can, since tonight is Monday night mugging for life, if you don't yet have one of the many different Smaulgld mugs, you can also consider visiting the site and purchasing a Smaulgld mug, either directly from Smaulgld headquarters, which are the classic and the super classic mugs that are shipped out with priority 2-day shipping included in your price in the continental U.S., or if you want something else like a travel mug or a beer stein or a pet bowl or a t-shirt or a hat, you can get them from the Smaulgld store. The links are all on Smaulgld.com. Just a note on the gold and silver. Today, pretty much no movement, even though today was... Actually, if you just looked at the open and closing prices today, you would think nothing happened in the markets today, but it was quite an eventful day. in the equity markets, at least, because we opened up with Trump making noises on Sunday evening that he was looking to increase tariffs by another up to 25% on Friday. That put the futures down bigly. And though today we ended up, the market opened up significantly down, but they closed pretty much where they started. Okay. Last night we did talk a lot about gold demand. Gold production, though, out from the World Gold Council. We didn't talk about the supply. And according to the World Gold Council, gold mining production grew fractionally to 852 tons, the highest level in the first quarter ever. So we don't really have this, you'll ought to hear the gold pumpers talking about gold shortage, just as the silver pumpers talk about silver shortage. Well, we're having some very decent gold gains in production. And remember, last night we talked about the central banks that are buying gold. Well, the ones that are buying gold, the two biggest ones after Russia in 2018 were Uzbekistan and Kazakhstan, which are essentially buying their newly mined gold, because those are countries that have decent gold reserves but have only just begun to start developing them, and rather than sell their gold, they're holding on to a bit of it and putting it in their central bank reserves. And again, Russia is the third largest gold producer, and they're buying up 85 to 90% of their own gold and putting it on their central bank's balance sheet. But the gold prices today and the silver prices today were pretty much unchanged. Silver is still below $15 at $14.88, and gold still below $1,300 at $12.81. Whereas the Dow Jones was down just 0.25%, and it was only down 66 points on the day, but at one point it was down nearly 500 points. NASDAQ was down a half a point, S&P down a half a point. But the sum total of what happened was really not much of a change at all in the equity markets today. As we mentioned, markets were set to plunge at the beginning of the day. There's the picture of the distressed-looking trader. Traders brace for sharp sell-off on Trump tariff threat. And then, of course, if you look at, they use the same picture at the end of the day, the same unstressed trader. Oh, that's not the one there. That's the one that's showing them that. Oh, no, actually, that is the one. They actually just changed the headline and said Dow makes stunning comeback, recovering nearly all 471-point plunge on hope trade deal not dead. So they updated their, I think that's CNBC, updated their story. Set to plunge and then didn't plunge at all. And here is the offending tweet from Donald J. Trump. For 10 months, China's been paying tariffs to the U.S. of 25% on $50 billion of high-tech and only 10% on $200 billion of other goods. These payments are partially responsible for our great economic results. The 10%, however, will go to 25% on Friday. $325 billion of additional goods sent to us by China remain untaxed, but will be shortly at a rate of 25%. So he's looking to up the tariffs. The tariffs paid to the U.S. have had little impact on product costs, mostly borne by China, which is true. One of the things that people say, which is generally true, about tariffs in a free market, which is a contradiction because once you have tariffs, you don't have a free market, but that someone's going to pay. And usually they say if you put a tariff on imports, that the consumers in the country that have placed the tariff on the imports are going to suffer. Why? Because if you were getting Chinese goods for $100 and now they put a 25% tariff on the goods, well, they now cost $125 to the importer, and they're going to sell them to you for like $130, $140, $150, as opposed to in the low $100. And the winner in that particular circumstance, I would say in the United States, would be the manufacturer who can't make something at $100 but can easily make it at $115. Now they can sell more goods. So the winners and losers are both in the United States. The winner is the American manufacturer and the loser is the American consumer. However, what Trump is pointing out, what China did in many of these circumstances where they had the tariffs placed on them, they simply subsidized the additional tariff costs because they can't have those state-owned enterprises laying off people and going out of business. So they loan them more money, they give them tax incentives, they do whatever they have to do to keep the wheels on the train. So it's a very interesting dynamic, and I'm sure both sides are got their game theory hats on and trying to figure out what to do. But as Trump says, the trade deal with China does continue, but too slowly as they attempt to renegotiate. He then says no. Then there was news out earlier before the market opened that China may walk away from it. Now they're saying they may do a deal. Who knows? But the net result was there was no real change in the equity markets. It looked like it was going to be a bad day in the equity markets, and it really was a non-story. And there's the big news from CNBC. Trump says tariffs on $200 billion worth of goods will increase to 25%, and then on additional $325 billion worth of goods. But again, net results, they said market calm had been shattered, but really was only crushed about 0.25%. So somewhat of a non-event. All right, let's move on now from markets and China. Let's go on to Warren Buffett and his pal Charlie Munger. And he first made news. This is really rich coming from him. He said if a bank needs a government bailout, the CEO and his spouse, it's pretty sexist, should lose net worth. All right, fair enough. A lot of people feel that way. Bank is mismanaged, or any company is mismanaged. Why should that company continue to make record salaries, executive salaries, and so on? They should, their fortune should rise and fall with the profits or losses of the company. If the bank is mismanaged and it's run out of business, well then, obviously, you would expect the executives that work there not to get their bonuses, not to make a lot of money. Nothing controversial about that, except Mr. Buffett here was a direct beneficiary of bailouts in 2008. He had purchased bank stocks that were all in the summer of 2008, and many of those banks required bailouts, and he did quite well as a result of the bailouts where he could have been wiped out. But he's saying if a bank needs a government bailout, the CEO and spouse should lose net worth. Okay, well then you should have lost net worth, and you would no longer be running your Berkshire Hathaway, stomping on the tables and swinging your Coke bottle, yelling about and arguing that Bitcoin and gold are worthless and that stocks are wonderful. Well, not only did he say that, and with no lack of self-awareness that he benefited from a bailout, but he's criticizing banks that may want to get a bailout, he does forget that in 2010, he hadn't forgotten. He actually remembered that he got a bailout. He wrote an op-ed in the New York Times thanking the government for his own bailout in 2010, and now he wants to deny others for that bailout. But let's take a look. Maybe some of you don't know about this, but he did write a love letter to the U.S. government for bailing him out. Well, let's take a look at that. It was called Pretty Good for Government Work, and it was penned November 16th, 2010 by Warren E. Buffett. Dear Uncle Sam, my mother told me to send thank you notes promptly. I've been remiss. And then he goes on to say, let me remind you why I'm writing. Just over 2 years ago in September 2008, our country faced an economic meltdown. Fannie Mae and Freddie Mac, the pillars that supported our mortgage system, had been forced into conservatorship, blah, blah, blah. And then he says, many of our largest industries depended on commercial paper. Financing had disappeared. We're weeks away from exhausting their cash resources. Indeed, all of corporate America's dominoes were lined up, ready to topple at lightning speed. Well, if that's the case, then maybe they should have been prepared to lose, quote, net worth along with their spouses, as he's saying today. Well, then he goes on to say, when the crisis struck, I felt you would understand the role you had to play, i.e. bail me and everyone else out. But you were never known for speeding at a meltdown. Minutes matter. I worried whether the barrage of shattering surprises would disorient you. You would have to improvise solutions on the run, stretch legal boundaries, all fine with him as long as he doesn't get hosed, and avoid slowdowns. You would also need to get turf-conscious departments to work together in mounting your counterattack. The challenge was huge, and many people thought you were not up to it. Oh, they were. They did the bailout. And then he says, well, Uncle Sam, you delivered. Blah, blah, blah. He goes on and on. You've been criticized. This was a man. I don't even want to read it. He basically says you're grateful nephew. Warren, thank you very much for bailing me out. But today, no one should get a bailout. Their spouses should lose net worth along with the people running the country. The company. That is Warren Buffett. And then, he's out today. He's always supporting the markets. He hates anything that isn't a market. He hates things that don't need bailouts. He hates things that you can't lobby. He hates things that you can't bribe. That's why he loves things that can go bankrupt. That's why he doesn't like gold or Bitcoin. He says here, stocks are ridiculously cheap if interest rates stay at these levels. So he's a constant cheerleader for the stock market, knowing that the stock market is his toy, and he always seems to do well in the stock market. And if he doesn't, well, like in 2008, there's Uncle Sam there to back him up and make sure that he doesn't lose any money. All right, let's move on to crypto. We'll have some more from Warren Buffett a little later on in the program, but let's move on to what's going on in the crypto space. Now, you still got crypto pumpers out there like John McAfee. What does he say? Remember, he says Bitcoin will be $1 million per Bitcoin at the end of next year, or he will eat a part of anatomy between his legs. Well, someone is out there pumping $400,000 Bitcoin in 2 years, to which John McAfee scoffs. Anyone who could add and subtract and who would even have the slightest comprehension of point set topology knows absolutely that it can't be less than 1 million within 2 years. I think he's stretching his period of time out because 2 years would be somewhat into May of 2021, but we'll, no pun intended, cut him some slack. Does no one study math anymore? WTF people, says John McAfee. And then he goes on to say, there is resistance to my Bitcoin price prediction. It's because people applying the paradigm of traditional stock market formulas to the crypto market. Only an idiot can miss the fact that the crypto market is a brand new paradigm unto itself. We're all that stupid. Now, this may be a lot of bravado and bluster, but there's a certain amount of truth in it, and it ties into Warren Buffett. We've had this discussion many times throughout the years here on Smaulgld. It's the concept. You see it with the gold and silver people. You see it with Buffett. When anyone has a particular attachment to an asset, they define it by what other assets aren't. So Warren Buffett is always talking about how gold doesn't pay dividends and gold doesn't do anything. And you dig it out of the ground and then you put it back into the ground to store it. People from outer space would be, quote, scratching their heads or shaking their heads. Then his sidekick Munger says gold is some type of bet against humanity. Yeah, you can say it sometimes goes up in value. And yeah, even if you made money on it, you're still an asshole for buying it. So they just don't like it because essentially gold doesn't do anything. Now, that's missing the point that it's not supposed to do anything. It's also missing the point that value doesn't necessarily have to be created through a stock. But that's how they view it. And they view that gold doesn't do anything, doesn't pay dividends. But it also doesn't go bankrupt. It also can't be bribed, doesn't lobby. It's the idea of a store of value. You can never have a company be a store of value because a company is a living, dynamic organism, which by definition is, quote, unsustainable. And you can't count on just parking your money in a company and hoping that the stewards of that company will always be able to turn a profit and give you a dividend. Things could happen. Better competitors can come along. But at least gold is gold. And because it doesn't do anything, you can count on it more than you can count on some stocks. McAfee's right to point out with Bitcoin, you can't look at Bitcoin as a stock. Like some people say, well, it doesn't have any earnings. How can you value it? Well, A painting doesn't have any earnings. How do you value it? Many things, and it's the same with gold is money, period, silver is money, period, as if the only things that are money can have value. And I just point to palladium. Palladium has no monetary value, and it's worth more than gold. Anything can have value, but you can't necessarily value every asset in the same way that you value another asset. So what Buffett tries to say is that gold and Bitcoin are purchased on the greater fool theory, meaning that they don't produce anything, so therefore you have to count on someone paying a higher price. Well, that's kind of true with stocks too. The only reason people pay for your stocks is because, in a sense, they are the greater fool willing to pay. You may say, well, they're willing to pay for higher earnings and therefore stocks are better. Well, maybe somebody's willing to pay for more gold because there's less gold or there's a greater demand for gold. Or maybe somebody's willing to pay for more Bitcoin because there's been a rise in demand for Bitcoin. Sure, whatever the rationale is, there's still value in anything that someone is willing to pay more for. But yet Buffett continues to insist that only stocks have values. Now, he did buy silver at one point. He hasn't really spoken about it in the last 20 years. He held it for 3 years. He made a 65% gain. He didn't get the big gains that came in 2011, but still, he made money on it. So he's somewhat hypocritical. I think he just likes to talk up the stock market. It's like everyone does. They like to talk their own book because that's where the bulk of his money is. And of course, McAfee's got his personal anatomy tied into the price of Bitcoin, so he's making his point. I view every asset has potential for value. Horses have value today, not based on there being transportation, because people, for whatever reason, like horses, want to hold on to horses. Hold your horses. They can bet on horses. Would we have the Kentucky Derby just the other day? All assets have different ways of valuing them, although even stocks today, even stocks amongst stocks, don't have the same way of valuing them, because if you had to go by profits or revenues, you can't really value Tesla that way. Tesla is valued on, I have no idea how it's valued, but it's worth a lot of money. All right, so that's John McAfee. You see these kind of predictions. He's scoffing at a $400,000 prediction, but Binance, the guy who runs Binance, can't think of his name, from Hong Kong. He's saying in a few years there'll be more users in crypto than there are users for internet today. That is quite a bold prediction. I suppose, the idea there is that places where they don't have internet, but they somehow have access to a phone, or they don't have banks, that somehow they'll be getting little drips and drabs of Bitcoin to do their banking, or they're not sure about that, but that's what he's saying. And here's a real Litecoin pump here. Will Litecoin rally to 1,000 after August 2019 halving? It's only at $77 today. Why it would go to 1,000? But this is the kind of stuff you see at the beginning of these manias. Adoption. We talk about Bitcoin adoption a lot and how it happens imperviously or imperceptibly, not imperviously, imperceptibly. Now it's on, there's a Bitcoin's Lightning comes to Apple smartwatches with new apps. We're seeing a lot of integration into the financial payment system, just even physically when we see things like Coinstar Bitcoin machines. So, for example, you can see here, buy Bitcoin. This picture you really can't see very well here. But there are now thousands of these across the country. And I find it interesting that they have in the supermarket the Coinstar buy Bitcoin here right next to the lottery offerings. And we talked about this maybe a few weeks ago, maybe a few months ago, that the more you see Bitcoin and Litecoin machines in places where you can also buy lottery tickets, I would imagine some people would probably opt to buy the Bitcoin or Litecoin, because with a lottery ticket, you either win or you lose on that given day of the drawing or the moment you scratch off the tickets. But at least with the Bitcoin or Litecoin, it could go up, it can go down, and quite possibly it's probably not going to go to zero, and then you can spend it in the store where you bought it. So it would seem to compete with lottery tickets, and that would make Warren Buffett very happy for me to analogize buying cryptocurrencies as gambling. All right, now, institutionalization. This is the big one that I've been focused on for the last couple of years, saying that actually Wall Street wants a crypto bubble. Wall Street saw, or on the sidelines, 2017, a bunch of amateur knuckleheads touting cryptocurrencies, ICOs. You had infomercials, you had BeConnect, you had what's up. You had all those guys out there raking in billions of dollars, pumping crypto, and Wall Street didn't get a penny of it. Silicon Valley didn't get a penny of it. And of course, now you've got Bakkt coming in here. New York Stock Exchange owner, which is an intercontinental exchange, says according to Yahoo Finance, is buying Bitcoin at cheap prices ahead of Bakkt launch. And there they are, the people who run Bakkt. They've also purchased a lot of companies. The goal of Bakkt, which is run by the New York Stock Exchange, Microsoft, Starbucks, and Boston Consulting Group, is to create a physically delivered Bitcoin futures exchange with also some storage options, and then the ability for hodlers or holders to convert their Bitcoin and perhaps other cryptocurrencies into fiat so they can spend them at places like Starbucks in order to, quote, drive adoption. Very big, it hasn't launched yet. Very big potential there. And what does this article say here? Executive role grows. A lot of people are moving. You don't know who they are, but they work at a lot of these other big banks. They're moving into, on the executive team, into Bakkt. Doubting this team would be foolish, says Abacus Journal. Van Eck. Here's a guy. This is a very good point here. His name is Gabor Gorbaks. He is working for Van Eck, and he's leading the charge to get the Van Eck Bitcoin ETF approved by the SEC. And he makes a very important point that we're going to see Pompliano in a minute. There are two camps, of which I'm in the third camp, but there's two camps on Bitcoin. There's one, Bitcoin to destroy the banks, to destroy central bankers, to destroy governments. It's this anarcho-capitalist. Everyone does everything peer-to-peer, sovereign individual. And the central bank and the dollar's days are numbered. That's the one side. That's the crush central banking mentality. And on the other side is the Bitcoin will be crushed by the banks, will be crushed by the governments because they see it as a threat and they won't allow it. And they're going to go after everyone and arrest everyone for using Bitcoin. My view, of course, is in the middle, is that neither of those scenarios will play out, in that governments will regulate, tax, track, regulate, tax, whatever they got to do to make their money, and that'll make Wall Street happy, because once you put everything under a regulated umbrella, who wins? The people that have the largest ability to comply with the regulations, like, as we're going to see, Fidelity, Bakkt, ErisX, Goldman Sachs, the ones that have the infrastructure, that are willing to pay for all the infrastructure, willing to pay for the lawyers, willing to pay for the technology to store the cryptocurrencies, willing to go through the regulatory hoops in order to do initial coin offerings, to hire the lawyers, the accountants, and so on. But Gabor is replying to A. Pompliano. Remember, Bitcoin wasn't designed for the big institutions. Now, Pompliano, he has been saying, I've been kind of prodding him not to say it, because he keeps saying long Bitcoin, short the bankers, but yet he trumpets these banker intrusions into cryptocurrencies. Like Fidelity lists that as a big thing. Fidelity is going to launch a crypto platform. Well, that's not short the bankers. That's long the bankers. Even maybe it's long for Bitcoin too. And Gabor, who is a banker, I guess, because he's promoting the Bitcoin ETF, he's saying he understands that Bitcoin wasn't designed for the big institutions. No, it was supposed to be peer-to-peer. It was supposed to crush the big institutions, right? Bitcoin was designed to empower individuals to acquire some level of financial independence and self-sovereignty. It's important that institutions are coming in, but more important that Bitcoin is running for 10 years. So he's making a good point. He is self-aware that his role is as a middleman to create a Bitcoin ETF, when there was no intention ever to put Bitcoin inside of an ETF. It's meant to be a currency traded peer-to-peer Why is there this middleman? Well, we have a structure out there with banks and institutions. Even if they wanted to, institutions can't go out and buy for their clients a bunch of Bitcoin stored in their own treasure. There's regulations against that. They have to have a 40 Act compliant custodian, and that's why they're all making these moves like Bakkt and RSX and Fidelity to sort out the, quote, custodial arrangements. But they know there's big money in it, and that's why they're doing it. They're, in a sense, co-opting all this. Now, here is RSX. I mean, they're backed by Fidelity. They're backed by TD Ameritrade, a bunch of other companies. And they're always promoting. They should be launching soon, too, as should E-Trade will be launching a crypto trading platform. So all the big entities are realizing there's a lot of money in this. They can't just let Coinbase get it. They can't just let Kraken and Poloniex and BitConnect and Binance get it all. And here they're saying if you're interested in our vision for digital asset investing, insight into how we set our member requirements, how we're leveraging our strategic partnerships to bring more adoption to this new asset class, we invite you to read a new blog post. So they're interested in, why are they interested in adoption? It's not like they see a better world because of Bitcoin. No, they see a better profit because if people adopt it, then they're going to want to trade it. They're going to want to hypothecate it. They're going to want to lend it. They're going to want to store it. Then they're going to want to trade it again. Then they're going to want to spend it. And that's where Wall Street gets all of its fees from. So that's why they want the adoption. I mean, it's clear as mud to me. I don't know why people don't see this. I mean, they're saying it themselves, but it's because people are looking at it in two different ways. You have your anti-Bitcoiners saying they're going to shut it down, they're going to arrest everyone, and you should just buy silver and be quiet because you should be lucky you haven't been arrested yet. And then you have the Bitcoin maximalists and the fanatics. They're just ignoring Wall Street. We don't need Wall Street, and we're going to crush Wall Street. And they're missing what's happening because they're so married to what they want to happen, either for it to go away or for it to make banks go away, not realizing that neither of those things, as far as I can tell, are even going in either of those two directions. They're actually going towards the middle direction, which is being rolled into the payment system, rolled into the taxing system, rolled into the regulatory system. And here you go. People say it's a Ponzi scheme. Well, if it was, remember, a Ponzi scheme is illegal. Wall Street doesn't, SEC and the laws don't ever condone or make legal Ponzi schemes. So you already have Bitcoin futures on the CME, and now it looks like CFTC says they're ready to approve Ethereum futures. In a few years, you're going to have futures in just about every cryptocurrency, and every company is going to have a token, and it's all going to be legal, and it's going to be regulated. Now, people will do illegal things with Bitcoin, just like they do illegal things with dollars, and governments will chase them down. But for the most part, they're going to regulate all this, and as far as I can tell, Silicon Valley and Wall Street are going to make a fortune. Now, I have a Smaulgld stimulus package that I'm going to unveil at the end, and you're going to see what that is, and I'm going to get your thoughts on. Now, let's get into Fidelity. For those of you following this channel, I've been talking about Fidelity getting into this since August 2017. Because I noticed Fidelity Investments allows customers to view Coinbase accounts on the Fidelity platform. I thought that was very curious. Now, a year earlier, the woman who was running Fidelity was allowing Bitcoin payments in the cafeteria. They were trying it at the Fidelity cafeteria. It's not very interesting that this mega bank with $7 trillion of assets under management will be messing around with Bitcoin. Well, on the Fidelity dashboard, if you have a Fidelity account, I think you can go in there and have been able to do this since August 2017. You can click on a link and you can see your Coinbase. And I know they have some little software bridge where you can, that's not fully integrated, where you can add all of your stuff together. Now, that told me that either Fidelity, in order to do that, they had to have some discussions with Coinbase. They were either looking to buy them or set up their own trading platform. It looks like they're probably not going to buy them. They are going to set up their own trading platform. They already have. And that Coinbase will probably just go public instead, and they'll both be out there competing for dollars. Coinbase takes cryptocurrencies mainstream with Fidelity Investments deal. And at the time, Coinbase raised another $100 million. So this is what you have out there. You have Kraken. You have Goldman Sachs-backed Circle, which owns Poloniex. You've got all these New York bit license holders all vying for this custody business, this trading business, this futures business. It's just, they see it as big money. There's no two ways about it. They're not investing all this money in because they think it's going to go away and they're all going to get arrested, or that because they think it's a Ponzi scheme. So today there were a number of announcements. It was in Bloomberg, had the story, and then it was covered a bunch of other places here. Fidelity to roll out crypto trading within a few weeks. That was according to Bloomberg. Here's the actual Bloomberg article. Fidelity Investments will buy and sell the world's most popular digital asset, Bitcoin, for institutional customers within a few weeks, sources say. And there's quotes from the Fidelity people on this. Here's in Cointelegraph, Bloomberg report. Fidelity will start institutional Bitcoin trading within weeks. And here is Fidelity pitching crypto, just like we saw RSX talking about how they're going to promote adoption. Well, there they are. Now, you never see this for gold. You don't see Fidelity touting silver or gold. And I'm not making a judgment. I'm just saying they don't. It makes no difference to me how these companies make a business. But institutional investors likely to increase over the next 5 years, says Fidelity Digital Assets. And they say, here's what institutional investors find appealing about digital assets. Yeah, they find it appealing because you're pitching it to them, and it's a self-fulfilling loop. It's almost like what the FBI did in order to get the Pfizer warrant. They leak stories to the press reports on them, and then the FBI says to the Pfizer court, look, all these stories are in the press. Well, why are they in the press? Because you leaked them to. It's the same thing here. 47% of the people in the Fidelity poll say it's an innovative tech play, high potential upside, uncorrelated to other assets, and enable decentralization. Jeez. If something is going to enable decentralization, I think I should invest in it. What does that even mean? Enable decentralization. The only one on there that makes a stitch of sense is high potential upside. Innovative tech play. Uncorrelated to other assets. Okay. Anyway, my point is Fidelity is going into this full steam ahead, and there's money in it. That's why. And here they're putting out these I think they put them out there to, I'm trying to think of the word for self. It's not self-reflective. Self-validating. That's what they're doing. They're self-validating the results so that institutions want to get into this because they're selling it and institutions want it, and that's why we're selling it, and that's why institutions want it, and the whole thing runs around. And it says here, institutional sentiment mirrors many of the positive developments we've seen in the underlying ecosystem. Again, building out the ecosystem, which doesn't, see, as Gabor Gorbaks points out, Bitcoin doesn't need an ecosystem, but they're creating one. Wall Street is creating one with the storage, the trading, all the different bells and whistles that you get when you bring financialization to an asset. That's how they make their money. They don't make the products. Rarely do they make the products. They package things into products. In other words, okay, now let's move on to our friend Pompliano. Remember, he's the guy who keeps saying, or I don't know if he still says it, long Bitcoin, short the bankers. And here he is touting Fidelity. Fidelity will begin helping institutional clients buy and sell Bitcoin in the coming weeks. Eventually, every financial services company will do this. Now, I don't disagree with him. That's absolutely true. But he's talking about banks here. If Bitcoin achieved a $100 billion market cap without institutional interest, this is my point, imagine what happens when he calls it the smart money joins. So I say, so long the bankers that are long Bitcoin, this is not what he's saying here. Everything in there is not about long Bitcoin, short the bankers. This is long the bankers who are long Bitcoin. But I like the point he makes here, the point I've been making for years now. if Bitcoin achieved a $100 billion market cap without institutional interest, imagine what happens. He calls it when the smart money joins. That's where I say it's not the smart money. It's the Wall Street infrastructure, regulatory stuff. I have here the retail Bitcoin bubbles of 2013 and 2017 were driven by amateur social media knuckleheads and with YouTube channels pumping crypto assets. Imagine the bubbles, I say, contrast to what Pompliano is saying, the bubbles that Silicon Valley and Wall Street can blow with crypto. I think he's absolutely right there, but when he says that, he can't keep saying long Bitcoin, short the bankers, because what he's saying is what I'm saying, that they are actually going to drive the next push forward. Now, what does Buffett and Munger have to say about Bitcoin? Well, they weren't just talking about banks who get bailouts should suffer, their executives should suffer along with their spouses. Nope, they were taking some swipes at Bitcoin. Let's hear. There's a lot here. We're going to break it down with Warren Buffett and Chucky Munger. Listen to them guffawing it up in front of their adoring fans here for a couple of minutes. And it really sounds out of touch to me, but I'll let you listen.
And I also want to report that your vice chairman is getting new social distinction. I've been invited during this gathering to go to a happy hour put on by the Bitcoin people. And I've tried to figure out what the Bitcoin people do in their happy hour, and I finally figured it out. They celebrate the life and work of Judas Iscariot.
Is your invitation still good? Well, Bitcoin, actually, on my honeymoon in 1952, my bride, 19, and I, 21, stopped in Las Vegas. We just got, my Aunt Alice gave me the car and said, have a good time, and we went west.
Let me show you the picture of these two. I mean, they are out of touch. They're sitting there. Do I have the picture? A little bit of a picture. You can hardly see them there, but I'll give you that. There they are. Let's continue with Buffett talking about his honeymoon and gambling. Now, Munger just talked about the Bitcoin people and Judas Iscariot. Now here comes Buffett on gambling.
In 1952, my bride, 19, and I, 21, stopped in Las Vegas. We just got, my Aunt Alice gave me the car and said, have a good time, and we went west. So we stopped in the Flamingo, and I looked around, and I saw all of these well-dressed, they dressed better in those days, well-dressed people who had come, in some cases, thousands of miles away. And this was before jets, so transportation wasn't as good. And they came to do something that every damn one of them knew was mathematically dumb. And I told Susie, I said, we are going to make a lot of money. I mean, imagine people going to stick money on some roulette number with a 0 and a 00 there and knowing the percent. They all could do it, and they just do it. And I have to say, Bitcoin has rejuvenated that feeling in me.
Yeah, Bitcoin's like putting money on a red gambling in 1952. And the people that listen to this gibberish are laughing. I did not understand that the quote Bitcoin people worship their idol Judas Iscariot. I have no idea what that means. You might say that silver people might do that because Judas Iscariot sold out Jesus for silver, but I have no idea what he's talking about. I really don't think that the gambling analogy, and a lot of people say that investing in stocks is gambling. I'm not quite sure what these two people are up to. It makes no sense to me. It really doesn't. I don't know what they keep going on about it. It's the same stuff with gold. They keep trashing gold. Gold doesn't make any sense. You dig it out of the ground, then you put it back in the ground. Doesn't pay a dividend. They just repeat themselves. And then it is interesting that when you have a group of people who are married to an asset, they like to get snarky amongst themselves. Gold bugs do it. Yeah, look at the central banks buying gold. They're just buying a pet rock. Haha, right? Just a pet rock, is it? And it's the same with, you get your stock jockeys. Yeah, Bitcoin's like gambling. It's like a bunch of gamblers and Judas Iscariot. It's pretty interesting when people fall in love with an asset, how they do that. And then you get your Bitcoin maximalists. Hey, look at all these shit coins. Look at all these shit coins. A bunch of shit coins. Oh, yeah. It's like Litecoin, shit coin. Huh? I don't get it. I've never fallen in love with an asset to the point where there's this snark where somehow you think that your asset is superior and you're with other like-minded. And the thing is, you really think that the other people that think like you, they could be morons, but because they agree with you, they're smart too. Like China is smart because they like gold. Americans are dumb. You could be talking to, I don't want to say Nobel Prize winners because that doesn't make you smart, but you could be talking to people who are really smart that just are not interested in gold or not interested in Bitcoin, and you'll think they're morons if you're a Bitcoin maximalist or a gold pumper. You just think, well, they just don't understand because they're not that smart. And you could be talking to a complete idiot, a blithering idiot who's binge watched a bunch of gold or silver pumper videos and is convinced that gold is real money, period. And you're saying, well, that guy, he's really smart. He's like me. He's smart. He likes gold. Yeah, well, this is what you get when you get Charlie Munger and the other guy. We're not done with them yet, though, because Warren Buffett is not done on his criticism. So that was Munger talking about the Bitcoin people and Judas Iscariot, whatever that means. And then you got Warren Buffett babbling on about his honeymoon where people were gambling, and it's just like Bitcoin, right? Well, his problem with Bitcoin is there's lots of fraud around. There's fraud around Bitcoin. Bitcoin's a gambling device, and there's lots of fraud connected with it. Now, here's a guy who's invested in fraud. He invests in Wall Street banks that have paid hundreds of billions of dollars in fraud-related fines. But Bitcoin is a gambling device with lots of frauds connected with it. Well, there's lots of frauds connected with Wells Fargo, who he's invested in, J.P. Morgan, all of these companies. He's got mortgage companies he purchased with. So the whole mortgage industry and the whole banking, everything is bad because there's lots of fraud connected to it. And it's a gambling device. That's what he says about Bitcoin. And here's another one about his lots of frauds. Yeah, lots of frauds in mortgage too. This link here is to him buying some mortgage company that had been bailed out and had done all kinds of fraudulent things. So it's not even a good argument to say anytime there, here's the point. Anytime there's a lot of money involved, there's going to be fraud. That doesn't mean that the industry itself is fraud, because every industry has fraud. We saw fraud in the gold mining. We saw those guys in elemental metal. They were dealing in blood gold and shipping in it without the tariffs. That doesn't mean there's something wrong with gold because there's fraud associated with it. People smuggle gold. Does that mean that gold is fraudulent because people smuggle it? No. They commit stock fraud, Ponzi schemes in stocks. So his point that there's a lot of fraud around Bitcoin just means there's a lot of money. There's a lot of value around fraud. There's fraud in the fine art market. There's fraud everywhere. So I actually think, and I don't mind saying this, is not that Warren Buffett himself is an idiot, but what some of the things he says are completely moronic. And I think what a lot of people do is they figure, well, someone is smart. They're not capable of saying stupid things. Absolutely false. Some of the smartest people say some of the dumbest things ever, but they get a pass on it because people have this idea that they're so smart and they know what they're talking about. No, they're smart on what they know, and they're smart on what they say, which is smart. But when they say stupid things, they're just as stupid as anything else. And in fact, a dumb person can say smarter things than some of the things that Buffett says as his rationales for being against Bitcoin or gold. Lots of fraud in that stuff. Yep, he's invested in fraud. Now, here's his other one he says, okay? He decides he's going to be real clever. And instead of calling Bitcoin tulips or rat poison squares. That was a real clever one. He's now calling it a seashell. Wow. That's stupid. I don't care what his IQ is or how much money he's made in investing. That's a dumb thing to say. While swigging on a Coke and looking over his Wells Fargo statement for fraudulent charges, Berkshire Hathaway CEO Warren Buffett moves from tulips to rat poison squares to offer a new metaphor. Bitcoin is a seashell. Yeah, we saw that. We saw that, didn't we, Charlie? Yep. Yeah, people were gambling on my honeymoon, just like Bitcoin. Yeah, like Judas Iscariot statues. They were all praying to them, those Bitcoin people. Yeah, it's a seashell. Seashell. Where's my Coke? I'm sorry. I just don't like when people listen to stupidity and they give it a pass because it's Warren Buffett. All right. Now we have others. Nobel Prize winner Joseph Stiglitz. Now, guys like Stiglitz and Warren Rubini, whatever his name is, these are people that are against gold. Warren Rubini was so against gold. He was saying it was nonsense. It would ever go to 1,500. It's just a rock and so on. The reason that Nobel economists, or just economists that don't win Nobels, I don't think Rubini's ever won one, not that it matters, but the reason they tout this kind of stuff is because assets that they can't manipulate, and I don't mean the price, where they can't control how things work and they can't write models around it, that's basically a threat to their existence. Because Stiglitz believes that his role and the role of central banks and central planners is to plan the economy. And you can't have a planned economy with Bitcoin in it, in his mind. So he wants to ban it. It's the same reason why they ban people on social media. They don't want to argue with them. They just say, look, we cannot have our nice things if you're over here talking about what you're talking about. So we're just going to get rid of you. It's the same thing with cryptocurrencies and some of these Nobel Prize winners. Their job as economists is not to figure out how Bitcoin works into the system. They don't want it in the system. So they can say, well, because I'm smart and I have a Nobel Prize, I could say something really stupid like, why don't we just ban it and we'll all be better off? And that's Stiglitz. And then we have another one. There's another professor here. His name is Steve Hanke, and he's making the same point. Bitcoin is up 6% to its yearly highs of around $6,000. No, it's up about 60% this year, but put that aside. Don't be fooled, he says. A 6% uptick is nothing after its huge plunge. Well, it's nothing, okay, but if you bought it 6% ago, you made 6%. So common economics or just math, it's up 6%. But then he has to go on to say Bitcoin is unreliable and susceptible to fraud. See, it's this whole idea that somehow there's fraud there. There's fraud. Anything with value is susceptible to fraud. It's not a currency. And again, if something isn't a currency, just like if it's not money, well, then it can't have any value. Something's not a stock, according to Buffett, it can't have any value because it's not a stock. Someone else has to buy it based on what? Some greater fool is going to buy your Moreau painting. It's going to buy your gold. It's going to buy your silver. It's going to buy your Bitcoin. Well, that's no good. It's not a stock. Well, he's saying subject to fraud, and it's not a currency. And it's nothing more than a highly speculative asset. Nothing more than a highly speculative asset that has turned in 10,000% highly speculative gains. I don't get it. I mean, it's a dumb thing to say. He probably is a smart professor, but they just say stuff. When someone is against something, it's very hard, I suppose, if you're against something, just not to seethe and just not to spout nonsense and not be able to really pick it apart. Because if you really hate something, you don't want to learn about it. So you just want to trash it. So I see people say stuff that's not even true because they just want to be against it, so they just make up stuff or they just say stuff to be against it, and they figure, well, I'll just argue by assertion. I'll just say it. I'll make a couple of assertions, and maybe I'll throw up a GIF, or I'll just say, that's enough. That's enough. And then, of course, if you're catering to an audience that already dislikes it, they're all going to think you're smart. You don't like Bitcoin either. You're like me. He's really smart. When maybe he's not saying anything. All right, do we have anything else? Oh, yes, we do want to go into my Smaulgld stimulus plan. Now, I'm not a central planner, and I'm not the person who believes in stimulus packages, but I'm thinking the way the bankers think, and I'm thinking the way governments think, and this isn't really a stimulus plan. It's really just a quick tax change. Here it is. The next stimulus. Let's say these bankers drive, with proper regulation, the crypto market up to past $1 trillion, $2 trillion, which is not hard to do. I mean, you just get it go up 10, 20, 30 fold. You get a bunch of ICOs out there, the existing crypto assets. You get a lot of value out there. It's out of thin air, granted, but that's where most of the value is. Then what you do is you lobby to have the capital gains taxes eliminated on cryptos, provided that any sale of cryptos are used to buy directly goods or services. So let's say you have this hodling going on, and let's say Bitcoin is at, 5,000 today. Let's say it goes to McAfee's $1 million. And you've got a decent number of hodlers holding on to $1 million Bitcoin. They sell it, they got to pay 28%. It's hard to sell. They have to sell it in increments. But instead, in order to get the money flowing, you say, look, you don't have to pay capital gains tax. Just buy stuff, goods or services. And if you do, you just don't have to record it as taxes. Well, then merchants will rush to accept cryptocurrencies because they want that money that's out there. Because these are people now who can spend money freely on their goods and services. So the hodlers spend and the economy booms. And there's no loss in sales or taxes because while they don't get the capital gains tax, there's going to be sales tax, and the companies are going to make fortunes, and they're going to pay their corporate taxes, and because they're going to have increased sales. Now, if you think about how governments always want, the Keynesians, they want spending. Well, the problem with spending and they want inflation is you got to give away money or all types of government intervention. This would be nothing. This would just be let the markets push this stuff to sky-high valuations and then don't tax it. They will spend it, and you'll get your inflation, and you'll drive prices, and you'll drive business activity that way. So that's the Smaulgld stimulus package driven by a simple change in the tax laws that takes away the capital gains tax on crypto gains, provided that those cryptocurrencies are used as a currency. Now, if you think about it, if you had $1,000 and you spent it, you don't pay tax on the fact that you had $1,000. Well, let's look at it a different way. Let's say you have $1,000 worth of euros that you bought back from the United States, from Europe on a vacation or something, and the dollar plunges against the euro. If you spend your euros, you don't pay capital gains tax on them. That's just part of a currency. So if they treated the cryptocurrencies that way, and cryptos became very expensive or highly valued, what good would they do to the economy unless they were actually used to buy goods and services? So there's my Smaulgld stimulus. I don't think it's far-fetched. It doesn't take much to do it. It's just a tax change, which I believe that tax change has been presented, not for the purposes for which I suggest, but it could indeed end up serving that purpose, meaning that if you didn't have to pay taxes on your crypto gains, that it would boost the economy. Now, I think the law that they've pushed out there, it's a de minimis exception. Like if you buy $500 worth of stuff. I would go the full hog and say, no taxes on any of it. That would encourage spending of crypto. That would encourage the price to probably go higher as well. And it would make, if they want people to adopt it, Wall Street, this would be great too, because now merchants would have it. Now the payment processors would be making money. There'd be a much bigger ecosystem because the velocity of crypto, the velocity of money would be much higher. All right, let's see what y'all are saying in the comments. And remember, it is Monday night mugging for life with Smaulgld. Let's see what we have. Live chat. Remember, if you want your comment called out, put SMAULGLD in it, and I will see it. If not, I may blow right by it, not because I'm trying to be rude, just because I don't see it. Maple Hedgehog. Phil Kennedy is here. Silver Stacker for Life, and Johnny on the Spot. Phil McCain. All regulars here. Pablo Pena. Jack is here too. Buying Bitcoin, he says. All right. Just forgive me as I'm scrolling. Sometimes there's some great comments, even though they're not called out to me, so I don't want to miss any of those. But let's see. Looks like there's a lot of comments, but none to me. Tremendous amount of comments. Sidebar, literally sidebar conversations off on the right here. Shark Air is here. Did see that. Bullbit. Okay, so Ann, oh, I see why. Ann made a comment and it was held for review. It's only because it's a link, so I'll show that. Let's see. Well, here we go. Fiona Whalen. Smaulgld. Buffett's main source of wealth is insider trading and shenanigans. Well, yes, for the last 15 years or so. Before that, he was a quality investor. He really poured through companies, found value, undervalued. But I have to say, since the financial crisis, when he bought those bank stocks before the crisis, seemingly that on the understanding that if they went under, they would get bailed out. And because he was such a big player in the market, the government kind of want to work with him to promote the stock market. So yeah, I used to say he was a crony capitalist, but someone pointed out to me I'm incorrect. He's actually a crony socialist, which is probably a better word for him, crony socialist. Yeah, and with tack, not picking right stocks, he's no better than Bitcoin or gold pumpers. He's a stock pumper. Absolutely, that's my point. These people that are Bitcoin pumpers, gold pumpers, stock pumpers, they fall in love with an asset. They develop all the talking points, all the snark around it, and then they criticize any other asset for not being their asset. Yeah, it's pet rock. Why are central banks buying it? Yeah, it's pet rock. Yeah, pet rock. Okay, hold something in the ground. Let's see what else. Something big is brewing. Maple Hedgehog, Smaulgld. I think there's some rumors Fidelity to start offering. It's not rumors. We talked about it. Offering Bitcoin to the higher end clients within 2 weeks. Absolutely. They've been planning this for 2 years, at least, as you saw in the video. I mean, the story I covered back in August 2017. Ann says they should have used, no, Pablo, Philip says, Ann, they should have used a Smaulgld mug. What are you talking about? You're talking about something else. All right. Everyone needs a Smaulgld mug. All right. Litecoin. Lots of combos here, but let's see. Oh, okay, Maple Hedgehog. Don't worry, Smaulgld. We were talking amongst yourselves. We were totally listening to you at the same time. Yes. We've got a multitasking audience here. Fiona Whalen, Smaulgld. I have another suggestion for stimulus. Get rid of penalty for early withdrawal 401k and IRA. People definitely spend all the retirement savings on a whim. Yes. The problem with that, though, I know you're being half facetious, and that would drive the economy, is then the government be on the hook again, though, to provide old age pensions for people for having spent their 401k. What you could do, though, let's say someone has a 401k, I don't know, Mitt Romney had one for some reason, like in the millions of dollars, which I don't understand. If the minimum amount you could put in used to be like $3,000 or $4,000, now it's like $6,000. I don't know how you have $4 million in an IRA unless you've hit on something huge. Otherwise, it's going to be worth a modest amount after 40 years. But let's say, I would agree, if you had an IRA, but it would only apply to rich people. If somehow your IRA was $4 million, $10 million, you could say you can spend up to like 90% of it without tax. I don't know. I think my idea works because it's not really taking away from anything. It's basically applying the windfall on the gains of the crypto that they boosted higher so you can spend them. There's really no loss. As I mentioned, there's no loss in the taxes probably because it'll actually be spread through localities, through sales taxes, and then corporate taxes on the profits. Another stimulus for stocks and markets, tariff on mugs. No way, Pablo. No tariffs on Smaulgld mugs. Get your Smaulgld mugs right now. Smaulgld.com. Mugs are real wealth. And by the way, since it is Monday night mugging for life with Smaulgld, I'm going to play you 18 reasons to buy and hoard mugs. And I'm going to leave you the link, too, in case you want to follow along with the pictures. 10 reasons why you should buy a Smaulgld mug. Reasons to buy and hoard mugs. Number 1. Mugs have been used for drinking for more than 5,000 years. Number 2. They are finding more uses for mugs every day. Number 3. We could not live our lives without mugs. Number 4. The Russians and Chinese are buying mugs hand over fist. Number 5. Mugs are made in China. Number 6. Mugs are hard assets. Number 7. Mugs are real wealth. Number 8. Mugs cannot go to zero. Number 9. Mugs are portable. Number 10. Mugs are drinking vessels, period. Wait, there is more. You can mix Mountain House in a mug. You can carry your barter silver in a mug. You can do many things with mugs that you cannot do with fiat currencies. Measure your wealth in mugs. They have mugs at the offices of JP Morgan and central banks. That is all you need to know. When the excrement hits the fan, you'll want to have your Smaulgld mug close by. Buy your Smaulgld mugs today. Reasons to buy and hoard mugs. Number 11. You can stack mugs. As you can see here, mugs are stackable. Add to your mug stack today. Buy a Smaulgld mug. Reasons to buy and hoard mugs. Number 12. You can put coffee in a mug. As you can see here, someone very clever has done so. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 13. You can put cognac in a mug. As you can see here, someone is thinking of putting cognac in a mug. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 14. You can display a mug on a studio soundboard. As you can see here, someone has displayed a mug on a studio soundboard. This highlights how versatile mugs can be. Mugs can be put in countless places, and we intend to show you as many of those places as possible. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 15. Mugs do not require electricity. As Smaulgld subscriber Wild Bill points out, mugs will still be usable after an EMP. Mugs do not require electricity. Here is a picture of a Smaulgld mug and another Smaulgld mug. They will look the same before and after an EMP and never require electricity. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 16. Mugs are undervalued. The price of mugs is about the same price as it was 10 years ago. This means that mugs are one of the most undervalued assets on the planet. Buy a Smaulgld mug today. Reasons to buy and hoard mugs. Number 17. You can hold your keys in a mug. Keys are very important. You can hold your keys in a mug. As you can see here, someone has put their keys in a mug. Buy a Smaulgld mug. Reasons to buy and hold mugs. Number 18. You can defend yourself with a mug. Mugs make great defensive weapons. In many states, you can open carry mugs. In all states, you can conceal carry mugs. Protect yourself with a mug. Buy a Smaulgld mug today. There you have it. If you didn't have enough reasons to buy a Smaulgld mug, well then consider buying a Smaulgld glass. All right, everyone. Unless we've got any further questions, I'm going to give you the Bernie Sanders 10-second countdown, and we'll say goodnight. Let's see. J.B. Wentworth loves those reasons. 18 reasons. If you want to hear it properly, the link is above there, Jack, and you can watch along. I was posting pictures, but there's an actual video. 18 reasons for you to buy Smaulgld mugs. Bury tulips in his backyard, says Phil McCain. Buffett hates mugs, says Jack. Yes. They have office. Yes, Maple Hedgehog likes. They have mugs in the offices of JP Morgan and central banks. That is all you need to know. Ann says everyone needs a mug. Yeah. I store my mugs in vaults outside the country. Yes. Where you can always get at them if you need them. Mugs are definitely versatile. And they are real wealth. Measure your wealth in mugs. Let me see if I got some more pictures here. So many pictures of Smaulgld mugs. People send them to me. I haven't posted many in a while, Crocodile. Here's the frosted mug. I do like the frosted mug. There it is. Lewis to crush the mug hegemony. Yes. Fiona, Smaulgld, do you think new tariffs will affect the price of Smaulgld mugs? Maybe it does. Have sense to load up on them before the tariffs kicked in. Well, I have a decent stack. I only have at Smaulgld headquarters the classic and super classic mugs. Those are the ones I send out personally. Sometimes with a Smaulgld game changer eraser. I send those the next day as I receive the order. I've got enough of them left. I don't need to stock up on them. The rest of the mugs are shipped out via the Smaulgld store, and you get those not as fast, but you get them. You also we sold a few pet balls for those of you who have dogs. They're very cool pet balls. There's the Smaulgld pet ball. But let me show you what I'll give you tonight if you order. By the way, you can put Mountain House in a mug. So if you're a real prepper, look at that. You can mix Mountain House, Pasta Primavera, either in the classic on the right or the super classic on the left. If you order a mug, you do not get the Mountain House, though. You have to get Mountain House sold separately, is what they like to say in the cartoons. Let's see, what was I going to show you? This one is I really think this is a great looking mug. Look at that. 22 ounce beer stein. I don't have that one. I think I have one, but I don't have that one for sale. I have one of my own. I have one wrapped. I might raffle one off one night. But that you can order from the Smaulgld store. You just go to Smaulgld. You'll find all the ways to order your Smaulgld mugs. And remember, always lead the mug life, baby. All right. Oh, Fiona says she just bought one. Did you buy one that I'm going to ship, or did you buy, let me see if I could tell. Or did you buy it from the store? Looks like you bought it from the store. All right. So I won't be shipping yours out. Unless you did order it from me directly, meaning from Let Me Know, Fiona. And I will ship it tomorrow. All right. We will see you guys tomorrow. I'll still give you the 10 seconds because I know you guys like to hear Bernie. Okay, so it's a good thing that you're all here tonight, but it's time to go. So I'm going to give you the countdown. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1%, 0. Have a good night.